Good morning out there. This is Darius Dale here to present our new and improved macro minute for Thursday, April 7th, 2022. Starting with the markets, we have stocks mixed this morning, commodities mixed as well. WTI crude oil leading the charge there up 2%. Crypto mix, dollar flat, and global bond yields up. News this morning, big news this morning. At the IEA, they have a decision to deploy 60 million barrels from their energy stockpiles. This sort of corresponds to or follows President Biden's decision a couple weeks ago to start to release 1 million barrels a day, 180 million barrels total. So we're starting to still see that. Obviously, crude oil bucking the trend, or a lot of that was obviously priced in. Shifting gears to China, the state council had a meeting yesterday in which Chinese officials confirmed that they will use monetary policy tools to support consumption at quote unquote the appropriate time. This rhymes with what we've been talking about in the program in terms of hearing the rhetorical policy pivot out of China, but not actually seeing a darn thing as it relates to the PBOC's monetary policy setting. And then lastly, you have St. Louis Fed President Jim Bullard, Atlanta Fed President Raphael Bostic, and Chicago Fed President Charles Evans speaking at separate events today. Expect Bullard and Bostic to continue to be as hawkish as they've been for the past kind of 6 to 9 months. And then taking it to the charts this morning. So what we're going to do on the program going forward to help you guys, gals, sort of set up for the trading environment, help you really manage the immediate term trading setup in markets a little bit better, and kind of take a little bit less of the focus off the medium term macro views. Because again, we want this program to really just help you kind of make and save money over the immediate term. What we're going to do is go through a compendium of all the key sort of macro markets from the perspective of our volatility adjusted momentum signal and the perspective of our probable range processes. So without further ado, let's just hop right into it. US dollar, by the way, the color coding at the title of the charts corresponds to the VAM signal, and the probable range charts are at the bottom panel of each of these charts. So right now, the dollar is bullish VAM still. It's got 1.1% of downside in its probable range versus 0.7% of upside. Gold neutral VAM still with minus 2.5% of downside in its probable range versus 2.9% of upside. Shifting gears, 10-year nominal Treasury yield, that's still bullish VAMs with minus 32 basis points of downside versus 14 basis points of upside in its probable range. High yield OAS, looking at the high yield CDX indices, that's still bullish VAMs with minus 28 basis points of downside versus 25 basis points of upside. S&P 500, that is bullish VAMs. It's almost oversold from that perspective with minus 0.7% of downside versus 5% of upside in its probable range. As you can see there, that probable range process started to skew once the market turned bullish, although I'm not sure how long we can sustain a bullish VAMs reading in the S&P 500. So I'd be kind of fading that to some degree. Lastly, same sort of conversely with the VIX, bearish VAMs there with minus 32 or 33% of downside versus 7% of upside in its probable range. NASDAQ neutral VAMs minus 2.9% of downside versus 5.6% of upside. Russell 2000 neutral VAMs as well, minus 1.5% of downside versus 6.3% of upside in its probable range there. Bitcoin here, neutral VAMs still minus 3% of downside versus 13% of upside. Ethereum neutral VAMs minus 7% of downside versus 12% of upside. Shanghai Composite, that's still bearish VAMs. This thing just bounced right up the top end of its probable range with minus 4% of downside versus 1.8% of upside. WTI crude oil, that's still neutral VAMs, getting close to the lower boundary of its probable range for the first time in a while here, with minus 5% of downside versus 21% of upside in its probable range. And just as a quick aside for those of you who might be new to the program, what the probable range processes are designed to do is kind of help you risk manage the next kind of 2 to 3 weeks of market movement. That tends to be the kind of the time it takes to go from the lower boundary, the probable range, to the upper boundary. It obviously varies by asset class in terms of the volatility of it all, but that tends to be kind of the central tendency. If you're at the lower boundary, the probable range, you should expect to be somewhere near the upper boundary in 2 to 3 weeks time, and vice versa. And then lastly, with ag, neutral VAMs with a minus 4% of downside versus 4% of upside in that index. And then industrial metals, looking at the Bloomberg Industrial Metals Index, that's neutral VAMs with minus 5.5% of downside versus 6.8% of upside. So with that, Darius Dale presenting our new and improved macro minute for Thursday, April 7th, 2022. Let us know, give us some feedback. Let us know how we can continue to improve the signals, continue to improve the process, and continue to improve the content, because what we're trying to do is help you make and save money here at 42 Macro. Cheers.